Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand the closing action on the D Street. Well, we're in the middle of the week and after 2 days of narrow band trade in the markets today, we have tested even 25,400 briefly in the trade today. Right now, the market is down by about 100 odd points on the Nifty. 25,442 is the current level. You can also see some choppiness that is emerging on the D Street. Only few sectors that are holding up are metals, consumer durables, auto, pharma and IT. Rest of the pockets have all slipped, with real estate index now down by 1.5%. Financial services, PSU banks have also given up the gains that they were tracking with. Now, of course, the banking space entirely is now down. Broader markets have also given up some gains and FMCG is also slightly lower in trade. On the Nifty, what's hovering higher from the metal pack? You have Tata Steel, JSW Steel. Those are the ones that are the top movers today. Asian Paints is higher. You have UltraTech Cement, Maruti, Wipro, Trent. So some IT stocks also that are holding up in trade as well, even though the index has now turned absolutely flat in trade. On the downside, IndusInd Bank continues to reel under pressure with fresh brokerage house concerns of downgrades. Shriram Finance is down, Bajaj Finserv is down, HDFC Life, Larsen and Tubro. These are the pockets that are still hovering lower in trade. Let's in fact welcome our guest on board. Mr. Sharad Avasthi is joining in, Head of Research at SMIFS, with us on the program. Warm welcome to you, Sharad, and thank you so much for taking the time out for this conversation. I wanted to start off by asking you on the markets particularly. Do you think markets are somehow lacking the direction in which they must move only because they are waiting for any sight of clarity as far as tariff talk is concerned? July 9 is fast approaching. There are statements that are coming in that indicate that a deal with India could well be in the works, could probably be coming out any time as we expect before the July 9 deadline. But of course, the contours of the deal will again be very difficult to comprehend even before they come, and what is to be expected is something which is difficult for the retail investors at large. How are you looking at the markets ahead of two big triggers, the tariff policy and the Q1 earnings, sir?
So I think regarding the tariff policy, we are not very nervous. I think agri remains the sore point where most probably some disagreements may come in, because US had from day one been peddling for easier lower tariffs on agri products, which I think will be hard for India to margin. So I think that is the only point of contention. The rest of it is more or less sorted out. Even if you look at the indirect, tonality of the discussions and the way India is being spoken about, I think it seems like a deal is more or less done. Though you can't say anything with people like Trump at the helm, you never know what changes when. But largely, whatever we understand as on date, I think the tariff is more or less a done deal. Though because the markets have already come up a bit from the lows, I think they want to be a bit more safe till final announcements come in. But I don't think that there will be too much turbulence because of tariffs or what happens there. Agri remains the only problem zone, and there also I think most probably India will get through with that without much trouble. So I think tariffs are not such a big challenge, but quarterly numbers, yeah, I think that could be something that you could look at very anxiously over this, because the first quarter we were expecting advances etc. to be much better, but till the data till May is not telling you a very rosy picture about advances growth. Though in some pockets there have been good advances growth, etc. But I think largely Q1 number consumption, etc., should be positive. So quarterly numbers, we are not expecting any kind of hiccups. Though for most banks, the treasury income part of it was wiped out because of the abrupt movement in G6 after the policy. So I think that is one sore point. Maybe you would have some minor disappointments here and there on the Q1 results because of that. Otherwise, we were expecting it to be very rosy, and BFSI remains, major area. So I think big weightage. So those numbers, if they were very but good with treasury income as well as advances growing, that could have been very positive. But again, I think the quarterly commentary will be very positive going into Q1 because the shoots on the ground are very positive. Urban consumption seems to be making a comeback. The headwinds of higher rates and inflation are more or less behind us. There may be a pause in rates, but I don't think you are changing the trajectory of rates going down. So maybe till that pause is there, you might, settle and look at things. But beyond that, we think largely even quarterly numbers, the worst case, they would be neutral in terms of providing direction rather than, providing a downward risk to it. So both numbers and tariffs, I don't think there's too much risk regarding these two, at least this quarter.
Okay, fair point. We will definitely come to some of the interesting points that you have made, sir. But since you started to talk about the banks, I wanted to talk about the new entrant today, HDB Financial. And what is your thought over there? It's listed at a premium, trading slightly higher to the listing price as well, about 13, 14 points higher, percent higher from the issue price thereof. Most of the retail investors have got the allotment this time around, and at least from the statistics that we make, at least all retail investors who applied may have got at least one lot, is what we are given to understand at this point. Now, I wanted to understand, of course, in the recent past also, we have seen mega IPOs upwards of 10,000 odd crore rupees that have entered the market. But unfortunately, most of those have still been reeling under sharp pressure. And the question is that, will HDB be able to probably break that 10,000 crore or 12,000 crore rupees of a curse that we've been seeing. Of the last 8 IPOs, I think 6 have delivered crushing losses to investors. So a large IPO, of course, we do understand the parentage is big and the size is big, balance sheet is large. How would you really look at this HDB Financial, sir, in the way of IPOs?
So I think Sakshi, the major difference is, that IPOs that we are talking about, most of them were new age companies, trading at an EV to sales kind of multiple, or maybe an LIC. Insurance is still very less understood by the markets, relatively a newer sector for us in India particularly. So I think all those numbers really culminate to these issues. While for HDB, I think the golden decision was to lower the prices and not keep it exorbitant. Though there was a lot of hyper hoopla about it, it is much lower than what people were expecting it to be. But I think that was the masterstroke, because of which maybe HDB will not bring you so much loss as some of the other issues have been, because the issue price was relatively much better placed in terms of valuation metrics. And regarding what one should do, I think the ideal approach with HDB should be that if you are a long-term investor who's going to stay put with this for around 3-4 years, I think it does make sense to stay put, because we are thinking that if the group is so aggressive with respect to growth, etc., the banking sector, I think the NBFC part should also grow leaps and bounds. So the group thinking should boil down to HDB as well. And consumer finance, etc., are relatively high growth areas if they do culminate. And recently there have been some credit cost issues that the company had faced in the last year. So if they can encounter that effectively and credit cost starts coming down, it is visible over the next 2-3 quarters. Then you could see further re-rating for HDB. But coming back to your point that whether this will disappoint or not, I think I would assign very low probability, because prior to the issue, credit costs has gone up, and the valuation at which they issued the IPO, I think that was relatively attractive.
Okay, fair point. Let's shift focus and ask you about the auto space at large, sir. We've just seen the auto sales figures come in. Two-wheeler sales seem like they have not yet picked up properly, despite most of the headwinds now behind. Of course, there are good monsoons that have come in earlier than expected. There is a rate cut that you mentioned also that's in focus. But why then do you think, or what is keeping the demand from picking up in the auto space, sir? And how would you approach the two-wheelers vis-a-vis the four-wheelers at this point?
I think it could be a base case scenario also, because sentiment wise also, the ban on this rapidos kind of stuff in some states is a negative harbinger for these for this sector. Beyond that, I think growth has been very rapid. The likes of Zomato, Swiggy resulted in a lot of growth for these companies also, and this right bike sharing also added to that demand. So the base is on the higher side. There is new competition also, so even electrics are budging in with their share of the market. So I think all in all, there's a lot of competition, organized, unorganized, that's playing in. And I think the electric advent also does eat into a bit of the commercial type, traditional EV type. So I think gradually what is happening is that all this combination is culminating into some kind of slowdown in the base effect also. But from here on, I think most of the base effect probably is absorbed now. From here on, we would see a normalized growth. And if some of the demand drivers are not abruptly, intercepted with some regulatory overhang, etc., whether it's the bike taxis or it's the Swiggy Zomato kind of models. I don't think that will be a very bad phase to be into two-wheeler stocks. And as we have spoken earlier, I think the tax cuts is something if that is to benefit one segment on the automobile space, it should be two-wheelers. So I think it should be good for them. Uh, Hero Moto obviously does remain my top bet. I think valuations are attractive. The R&D cycle is more or less completing and beta launch of the slower version also has come in. So I think all this should culminate into very good growth for them. And there could be some positive surprises also. And current valuations are also probably most attractive within the sector. Bajaj Auto some minor upside, but I think Hero MotoCorp remains a top bet. So I don't think you should be very perturbed with what is happening on two wheelers. Maybe the monthly data does not show you a very rosy picture,
Hmm.
but I'm very bullish that over the next 3 to 6 months you will see a very strong revival there.
Okay. So, how are you reading into this macro? The Quad group of nations, including US, India, Australia, Japan, they are all now deciding and agreeing upon how they need to diversify their supply chains and not just rely on China for at least the rare earth magnets. That's another issue that was impacting the auto companies as well. Now, with this kind of a new geopolitical reset coming in, do you think things could progress on the positive side now? And for India, Indian companies manufacturing in India and exporting within the auto pack?
Yeah, certainly. I think the rare earth, particularly the magnet issue, not the whole rare earth spectrum of it. I think that would be a difficult thing to, replicate China across rare earths. But I think magnet, which is the basic requirement, it's a very basic thing. India, Australia have those reserves. So I think, and to scale up that production capability is not such a, technologically challenging issue. It's a very simple business. But it is just that China was doing it at a scale and providing it to the world. So no one was really bothered about it. But I don't think it will be a long-term challenge. Might be 3 to 6 months till such time that you scale up those facilities where you put up these plants. That's the maximum time because these are not very technologically challenging. So I don't think that's going to be a very big issue. Short term, yeah, but I think even if you look at most of the companies, what are they saying that we more or less have the issue addressed? I think barring Maruti, no one has come out and highlighted a very big problem out of the rare earth issue. So I don't think it's a very big challenge. Yeah, maybe 3 4 months kind of issue, maybe till such time that these facilities come up, but nothing much to worry about.
Okay, got that. Also wanted to discuss consumer durables, sir. Again, same factors that usually impact the sentiments and the demand. Favorable monsoons, higher more increased tax rate cuts, and we are also seeing the tax cuts now supporting. What were the consumer durable space? Although I believe the early monsoons may have impacted at least the AC division for now, but what about the entire consumer durable space, sir?
Uh, I think again I'm very bullish in this space. I think beyond the traditional tax cut that we talk about, I think there is another incentive of around 40 45 billion dollars that comes from government hikes to salaries, etc., and allowances. That should play out very positively. So I think over the next 6 to 9 months, yeah, rightly pointed out, maybe this season the ACs have not done as well as they should have done. They might have done, but I think long term, what are you looking at? You're looking at normally temperatures going up. So I think long term demand for most AC cooler companies will be there. So I'm not very perturbed about what has happened in maybe one season going off. I don't think that's such a big problem. But yeah, across the board, I think beyond your traditional tax cuts also that we were talking about, I think the increments, etc., or the allowances, etc., that are increased by the government, central government, state government employees, I think that also should add to the consumption basket. So I'm very bullish on the whole consumption basket, and I don't think the eatables kind of stuff can go up much. But these consumer durables are something that should continue to do very well. Premiumization, improving to IoT connected devices, etc. Availability of power, tier 2, tier 3 cities also coming up. So I think everything's improving gradually. You're not really looking at the traditional fan and light market. It's transforming into BLDC, etc. and connected apps. So I think companies like Bajaj Electrical could do very well. Crompton, I have already spoken about earlier also. Orient Electric could be one such story that you could bet on. On an off season, I think Symphony doesn't really make it. It's more or less the winter product, summer product kind of company. But I think that's also a good long-term story. So you get these dips, you can accumulate even like a stock like Symphony. So I think these are three, four stories you can look at. And across the board also, I think consumer durable should continue to be very attractive in India.
Okay, fair point. We'll keep that in mind, sir. Apart from this, what's your call on the metals pack, sir? We are again seeing 1.5% moves. Every a few days we do see a comeback of the metal stocks, sharp spikes being seen. Any suggestion on this one? Is it in for any structural move? Is it only cyclical? What should one know?
I think largely cyclical. I think the big overhang is, transforming into greener manufacturers, which will result in a lot of costs for these companies. The EU taxations will also come in. I think they will also play a role. So I don't think it will be easy for, metal companies, particularly who have an international exposure, etc. And even those are particularly dealing on the domestic side. I think most of them are trading at fair to square valuations. Long term, maybe Tata Steel, JSW Steel, they have very good capex plans, so they could be good idea. But what I'm trying to do is I'm trying to bet it through a mix of the second line on the metal space. So something like an RHI Magnesita, which is making refractories, something like an HEG, something like like a graphite, which is making electrodes, and maybe something like a Rain Industries, which I think is a multi-bagger idea. So you're making CPC and carbon products, which are used in aluminium. So I think this is a better way of playing, the metal rally if and when it happens. But the frontline metal stocks, I think they seem to be fairly squarely valued for maybe next 1.5 2 years.
Let me ask a few stocks now. Asian Paints is something that I wanted to begin with. Again, today there's been a CCI probe that's been ordered to find out whether Grasim's complaint, stands true when it comes to Asian Paints abusing its dominant power in the entire space. Now we have big players like Grasim, JSW entering in, and of course there is a risk of market share loss. The stock has already been seeing a lot of dampened sentiments across the last 1.5 years. Even the earnings have stood to be muted. Q1 again is something that we will be looking at. I think within the first week, 10 days of the earnings, we will again get to see what Asian Paints comes out with. What is your own approach, sir? Do you think a lot of the bad news is already priced in, or should one take advantage of this level? Even if there is a CCI probe or an impact that we see, will it be a big or a longer overhang, sir?
Firstly, regarding the CCI probe, I don't think it will be a very elongated process. It's a normal traditional practice. If someone's complained about something here and there, they will need to look at it. And we all know Asian Paints has a dominant share, so maybe some practices here and there went higher. Not particularly at the hem of the company, but a lot of things happened within the distribution chain, which may be not at the direction of the company, but may have happened in some pockets. So I think it will not be an elongated process. Regarding the market share issue, I certainly think that the entry of JSW and Grasim does dent the market share. But I think it largely dents the market share on the lower run companies, which are having smaller market shares. So maybe at best you could have impacted the Kansai Nerolac. But I don't think that these companies are still in a position, to challenge Asian Paints and Berger's market share per se. The other thing that these two companies are doing, I think, as you rightly pointed out, the numbers have been somber and downgrades have been regular over the last, 1.5, 2 years. But now I think, firstly, the raw material pressure will not be there. I think oil prices are on a gradual decline, so that should help most paint companies. Not that it is directly correlated in terms of raw material prices, but yeah, it should be much better. We are very bullish on the real estate outlook, etc., and per capita incomes rising. So that should help paint companies and demand as well. More and more urbanization should help them because we live in urban centers. We understand the rental side of it is there. Then regular painting actually happens at a much more frequent time frame rather than the traditional non-renting business, self-occupied properties. So I think that way demand should be there. And I think raw material pressure will not be there. So most probably we will see some margin improvement. And the other thing that I think is that both Berger and Asian have aggressively done is they've also worked on the ancillary part of the business, which is, waterproofing, etc., and all that stuff. Though I still believe that maybe they are not pretty right in terms of how they have priced those offerings, because compared to your local vendor, it might be a bit too premium actually. Even for a brand, you don't end up paying so much premium. So I think pricing is something that they need to work on. But compared to international standards, that is something that could be a very big sector for them, which could provide, faster growth vis-a-vis the traditional paint business, which might grow at low single digits for quite some time. So I think all this combined, trading at 50 times FY27 earnings, less than 50 times actually. And there is a high probability, that what we are expecting 11-12% kind of bad growth. That can be substantially re-rated over the next 1.5, 2 years. And I am not thinking, that Grasim and JSW will initially challenge Asian and, Berger. But the lower rungs, yeah, they will get challenged. So I think, yeah, these valuations, maybe it's fairly squarely valued. I think as and when upgrades start rolling in and consumption starts picking up, I think that is the time I would be more aggressive in terms of buying Asian paints. So what I'm looking at is FY27, maybe they report something, around 55.
Okay.
Yeah, so 40 times, 50 times is possible. So, 2500, 2700, that could be the range that it might go up to on an optimistic scenario.
Hmm. Okay, got that. Also wanted to ask you, sir, when it comes to the entire pharma story, what's your approach here? We've recently seen Apollo Hospitals talk about a demerger of its pharma business, diagnostics business as well. How are you looking at, what's happening in the pharma? There is a lot of interest that's emerging on the CDMO space that we've discussed also in the past with you also, sir. For somebody who's looking at the pharma story from a long term, what is the best way to have the best mix of hospitals, diagnostics, as well as the frontline pharma OEM players?
Uh, so I think if you're looking at long term, I would certainly go in with Biocon. I think the type of product portfolio they have, paced out in terms of biosimilars, etc. They would most probably also benefit out of the GLP advantage that is there. So I think Biocon is certainly, because long term, if you are talking, I think IPRs will make a very big impact, and Biocon has already always been very focused on that part of it. So I think Biocon certainly is one idea that I'm looking at if you want to play that out. There's a mix of CDMO, etc. in that. So I think Biocon is a combination of biosimilars and CDMOs, etc., all playing out over the long term. So that is one story. I think as the Viatris acquisition more or less stabilizes further over the next 2-3 years, there could be high possibility that this gets re-rated very strongly. And the other thing, I think if you want to play the healthcare space, I think healthcare as a basket, though we are very bullish about the long-term projections and everything, and low availability of beds per thousand in India. I think it has a lot of scope to grow. But in terms of valuation, I think probably Narayana was the cheapest some time ago, but I think it still is the cheapest. But I think the valuations are a bit stretched there, so you might not be. And the CDMO space, maybe DVs does a turnaround very strong, but valuation comfort is not there. So if I want to bet on purely pharma, I think maybe Dr. Reddy, mix of CDMO, etc. I think long term, 4 to 5 years, I think Biocon certainly is my top bet.
Okay, got that. Got that. Let's also just understand a little bit more, sir, from you. I wanted to talk about what's happening also in the cement basket per se. How are you looking at that one? Cement, infra, these spaces are also gaining some traction. Would you again stick with the large caps, names like UltraTech, Grasim? Is there a new change in the pecking order? Are you also looking at the mid cap cement players, sir?
Yeah, certainly. I think among the frontline names, I would not be able to bet on an UltraTech because of the premium valuations it always trades at. So I don't think it offers me that, arbitrage of high growth and low valuation. It's high growth, certainly it's dominant market share, but it's at very premium valuation, so it does not leave me any trade-off. Comparatively, I think maybe ACC is a good bet because as you know, the EBITDA per ton increases over the next 2 3 years. That is something that could get re-rated very smartly, and a lot of additional returns could be made out of that. And within the frontline names, I think Dalmia Bharat could also be one story that you can still look at. I've been recommending it for quite some time now. I think that's a good story. Once this south-north divide further narrows down, which has been narrowing down over the past 1.5 2 years, I think there is high probability with that pickup happening, the eastern part of the business picking up, and the way they have been growing in spite of the JP setback that they receive. I think largely they've grown at a very handsome rate. They still have very aggressive growth targets. So Dalmia Bharat could be one story. And among the smaller names, I think we would bet on JK Lakshmi Cement. They're not smaller particularly, but yeah, the second line basically beyond the likes of Dalmia Bharat, Shri, UltraTech. These are the larger names. So I think JK Lakshmi Cement is one nifty operator, one thrifty operator that we would want to look at. Operational metrics are good, long-term capex is good. I think one of the most efficient producers. So I think we would like to continue with JK Lakshmi, working with targets of what 1100, 1150 to start with.
Yeah, we'll definitely note that down, and I hope all the viewers have also taken that down as well. Mr. Avasthi, towards the end, help us understand, apart from the sectors that I asked you, the stocks that you mentioned already, what else has come in afresh onto your radar ahead of the Q1 earnings? Are you adding a few names to your clients' portfolio, sir?
We have recently recommended Blue Dart, I think, but it moved up a bit yesterday only. So I think that's looking like a good story with the type of air traffic, the traffic that they have on their side. They have a moat there, and they have done some capex. So I think as it starts playing out over the next 1.5 year, that could be one story we are looking at for targets of around 8,300, 8,400. So that is one story you can look at, but it's gone up a bit yesterday and today maybe, so you could buy it on dips rather than just jump into it today.
Fair point, sir. Okay, Mr. Avasthi, we'll leave you at that. Thank you so much for being with us on the program. Always a pleasure to speak to you and seek those wonderful insights. Thank you. All right, viewers, we'll start to wrap up the trade today. Again, I think it's the fifth consecutive day when we've been seeing long haul consolidation really take place in the markets. Now you're looking at a 90 point of a dip. The good part is that we are off the lowest point of the day. We had briefly tested 25,400. We are back near 25,450 right now, around 92 points lower in trade. The sectors that are still holding up are metals, consumer durables, pharma, auto and IT. Largely, most of these sectors have already been discussed by Mr. Avasthi, and his comments have been shared with all of you, including the stocks that are on the move: Tata Steel, JSW Steel, Asian Paints, UltraTech Cement, Maruti. These are the stocks that are hovering higher. On the lower end, Shriram Finance, HDFC Life, IndusInd Bank, Bajaj Finserv and L&T. These are the stocks that are lower in trade. Let's talk about the F&O space. Kalyan Jewelers is the one that's climbed up 4.9% higher. Aditya Birla Fashion and Retail is performing. Mankind Pharma. You also have Tata Communications and RBL Bank as the top performers on the F&O. On the lower end, you have names like NCC, Phoenix Mills, Tube Investments, Prestige Estates as those that are declining. Remember, the real estate index is the top laggard as far as the sectoral action is concerned, down about 1.5% in trade today. Moving on to the Nifty 500 names, look at the newly listed stocks. Sambhav Steel Tubes, that's currently hovering about 20% higher at 98.65 odd levels. There was a strong listing pop, and therefore you do see continued move on this one. Let's also look at some of the other stocks. Gabriel India, that continues in fact it had also hit a 20% circuit today. It's now hovering about 15% higher. HDB Financial Services on day one of its debut closes at around 840 odd levels, and you can see still about a 13.5% uptick on this one on day one. You also have names like Genus Power, Genus Paper and Boards, that's up in trade. You have TTK Healthcare, Sagility India. These are the names that are higher. Some sugar names like Bajaj Hindustan Sugar are hovering up. PC Jeweler is also higher. So Kalyan Jewelers, PC Jewelers, both are hovering up in trade today in the broadest index as well. Now let's also talk about the top laggards here. Sigachi Industries, remember with that blast that happened. Of course, Sigachi has also talked about how 40 employees have lost their lives in that accident, and we are also seeing Hyundai Motor India down by about 6% in trade today. One Source Specialty Pharma, you were seeing Narayana Hrudale, that's down. Dream Folks is also down, with that warning coming through that the impact of some closures of the projects is concerned will be felt on the financials. That's lower in trade. Globe Civil Projects is down by about 5% odd. Those are some stocks that you should be definitely marking for yourself. Purvankara is down again from the Realty Pack in trade. PSU stocks, only the oil and marketing companies, OMCs, Oil India, GAIL, NTPC, some railway names, they are also buzzing in trade. But we close in at 25,443, 98 points lower in trade. Of course, as we move in tomorrow, we will definitely see a whole host of statements that will be coming out from the US. In case there are any indications of US and India getting closer to a trade deal, that will be important to track, because 9th July is fast approaching, and that's the big deadline that we are waiting to see how reciprocal tariffs shape up for our country. And of course, we will be inching closer to the Q1 earnings. Everything and anything that is moving in the markets, you will find it on Business Today television. So stay tuned. Even beyond the market hours, you will get everything that you need to know from the world of business and finance. Stay tuned.
The race for the next BJP national president has picked up pace. With organizational polls nearing completion in several states, sources say